Welcome back, dear friends, to yet another episode of the EUVC Podcast. I hope by now you know this is the place where we connect and champion the European venture community. And as you know, we also believe that this ecosystem is much more than just cap tables and term sheets. It's about the people that are behind the grind, the leaders shaping the culture and character of European tech. This episode is a special one, as I'm kicking the mic over to Mike Reiner of 432, a fellow community builder, and also our co-host of the Venture Beyond series of incredible events we'll surely also talk a bit about today. And of course, this is a place where we bring VCs and founders together for deep work and transformational journeys. Before we start the show, a quick note. If you're building or running a fund, you know it takes the right partners. At EUVC, we only work with sponsors we truly believe should be part of your tech stack. Please do take a moment to hear about them. And if you do, reach out, mention EUVC. It's the best way you can support what we do. Thank you so much. Starting off, HSBC Innovation Banking. If you're a founder, a scale-up, or a VC, you need a bank that actually understands your world. HSBC Innovation Banking backs innovation globally, from seed to IPO. And if you ask me, a strong banking partner like HSBC belongs in your stack. If your portfolio companies are scaling, they need infrastructure that won't slow them down. Google Cloud Starter Program offers $2,000 to $350,000 in credits, plus technical support to build better and faster. It's a key boost every fund should bring into their ecosystem, and oh my God, are we thankful to be partnering with them. Now, legal is a space you cannot lag on. Legal needs to move at the speed of venture. Goodwin's team has decades of experience with startups and funds. They're trusted at every stage from formation to exit. Goodwin definitely is a legal partner every serious manager should have in their stack. For Luxembourg-based VC, PE, and fund of fund managers, modern funds means going digital. Fundcraft gives you a full-service, digital native platform built for today's European managers. It's a must-have if you're scaling smart. So we all hear about the Middle East. How about you go there? From AI to deep tech to sovereign fund, SkyTech in Dubai is where global future of tech gets negotiated. It's not just a conference, it's where East meets West, capital meets innovation, and the bold set the agenda. If you're playing on the global stage, join us going to SkyTech this year. If you're gearing up for your next fundraise and want a placement agent who truly understands emerging managers, reach out to C Funds. They're a boutique placement agency that has helped GPs across Europe raise capital from top-tier LPs. We've been on the other side of the table here. They are actually good ones to work with. So I do urge you to go to cfunds.io to go and check them out. And hey, before you go, if you're looking to discover startups, raise capital, or connect with innovation leaders, do check out dealflow.eu, the EU-backed platform bridging founders, VCs, and corporates. There's no better place to find the startups that have received significant funding from the European innovation ecosystem.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Mike, will you tell us all about why you thought Dave Bailey of foundercoach.com is the perfect person to bring on for today's pod?
Yeah. So look, as you know, we work with selected coaches for our portfolio companies. So I'm continuously looking for great coaches. And it's rare to see an exited founder, turned VC, turned coach. So actually, it's also a very great way to get to know Dave in this playful way and hear a bit more as to how that journey looked like and why the jump also from VC to coach. Maybe Dave, you can go a bit deeper into your journey. Tell us, take it from there.
Well, thanks for inviting me on. Most people know me as one of the OG CEO coaches here in Europe. What a lot of people don't realize is that, as you say, I am a founder at heart, and I've also been in VC a little bit too. So taking you way back in 2007, I co-founded my first tech company. It was a ed tech company in Brazil. We were teaching Brazilians how to speak English. And that experience really kicked off what became a deep obsession with scaling businesses. And nothing really prepares you for the reality of growing a business. It's incredibly complex. It's a hugely steep learning curve. It's painful. It's kind of lonely. And while you're surrounded by people, whether it's your team or your mentors or the board and your investors, a lot of the advice you receive is somehow simplistic, somehow out of the details and difficult to implement. And it's certainly never as good as the person giving it thinks it is. So I learned the hard way that actually learning by trial and error when I was scaling my businesses was, the way to do it. And so much of building a business is counterintuitive. So anyway, after that first venture, I co-founded a couple more, including Delivery Hero. That went on to IPO in 2017. And at that point, I really figured out that I wanted to give back and really help founders and the next generation of CEOs scale their businesses and avoid many of the mistakes that I made. And so like a lot of exited founders, I decided to join a venture capital firm, actually one of the firms that invested in my third venture. And the thesis was that as an experienced operator, I could come in and support the founders with a lot of their challenges and add some value. And while that was broadly correct, I definitely thought it was harder than I expected to. Helping founders as a VC, as a VC, you get to see a lot of different patterns. You have a large portfolio of companies, and you're also highly vested in the founder doing a great job in scaling. So you want to come in and give advice and share what you're seeing and give some tips along the way. But it turns out that if you go in as a VC and start telling founders what to do, they very quickly tell you where to go. And I experienced some of that defensiveness from some of the portfolio CEOs, and I got really curious. One of my closest friends was making the transition to coach over in Australia. He said something that really, really stuck with me. He said, the reason people get defensive is because they feel attacked. And the real reason they feel attacked is because they think you're judging them. And the real reason that they think you're judging them is because you probably are. And he said, the opposite of judgment is curiosity. And that was a real aha moment. So I ended up getting into coaching. I was at a founder dinner. One of the founders was looking for a coach. This was back in the time when coach was a real dirty word. It was something eccentric, something that sort of happened in the West Coast of America, but not something that at all applied to European startups. And anyway, this founder convinced me, because founders tend to be pretty convincing, to be his coach. I ended up taking a lot of training and really started to think about what would be the right kind of approach for a venture-backed startup. And how can you help companies with curiosity, not just with judgment? And so that was how I got into coaching. One client became two became four. And after a very short period of time, I had about 50 or 60 CEOs reaching out every single month. This was maybe 5-6 years ago. And so since then, I've worked with about 250 CEOs. Some have gone on to build unicorn companies, and I've really grown up a lot with them, both as a coach, but also as a founder. I still am a founder first.
Did you also consider kind of building a fund at the time? Did you consider to combine the two things of figuring out to build a new type of fund where coaching comes first in a way, or just curious how that transition looked like for you?
Interestingly, it's come up since, because I think there's a correlation between a lot of my CEOs have been incredibly successful. I don't know if it's purely down to working with me, but I hope to make some have had a positive impact. But I think the kind of people who look for coaches, they tend to be quite low ego, as in I don't have all the answers. I want to surround myself by the right people who can really help me. And so I have thought about that since. But if I'm being honest with you, I didn't love my time in venture because I really hate meetings. Like, I really hate them. A lot of what I did in venture was have meetings, and that wasn't my favorite place. And so when I started coaching, it was, first of all, the interactions I have with CEOs is somewhat different to what I was having in venture. And then secondly, these days, the way I work with founders is really radically different. So I have a very open calendar. I'm a lot more responsive to client needs than I have been in the past. And so, yeah, venture wasn't the perfect fit for me at the time. But, as far as funds go in the future, let's see how that goes.
Can I just ask, do you angel invest though?
I did a significant number of angel. Well, no, actually it's not significant, but I did a lot of angel investing. And, there's that whole story, how if you want to, the fastest way to become a millionaire is to be a billionaire and angel invest. And so I didn't go to the extreme. I think to be a great angel investor, it has to be a primary focus. You need to really think about deal flow, and it's a numbers game. That's at least my belief. And I did it more as a way to support people in my network who are building businesses. And I would say the results have been patchy at best.
Mm. So you already kind of like touched on this a little bit, but I think a great skill is asking the right questions. And I think it's skill that many VCs are very, very poor at. So I'm curious, like, what is most important for you in coaching? And maybe you can go a little bit more into also your methodology, because I think you programized it quite a bit, and that's actually what I love about your approach. Maybe you can go into this. What's most important coaching for you, and go into the framework?
Yeah, great question. So, well, the answer might surprise you. The most important thing in coaching, I think, is results. And so results really are at the core of my approach. And I'm always looking for founders who deliver results. And so right when I start working with a founder, one of the first things I like to do is to give them a challenge. Challenge is a really, really cool coaching technique. It's about taking something that they want to do, maybe they know they should be doing it, and challenging them to go 10% more than what they thought was possible. And at the end of the first month, it becomes really clear who are the people who get results. When I built this practice, I really wanted to put results at the core. And so I tend to surround myself with CEOs who are really good at getting results. And I very early on ask them a question. I say, in this relationship, who is going to get results? Is it me or you? And they're like, well, it's me. And I think of myself as being responsible to them to help them get the results that they want. But I think results is the most important thing, and it's so often overlooked. You know, there's a great coach called Marshall Goldsmith, and I learned this from him. And he was asked, what makes a great coach? And he kind of flippantly said, great clients. And I figured that out. And so I almost use my coaching to screen out who are the CEOs who are going to go the distance. And that's why actually when I work with a founder, it tends to be a very long-term activity. I work for many years. But I'd say results is the main thing.
And what do you pay attention to in terms of you selecting your customers, founders, similar to VCs, trying to invest in the right founder? What are the key criteria that you're looking for in a founder that you want to coach?
Yeah, well, one is action-oriented. Coaching is often thought of as a Socratic method, which is about reflection and talking. But actually, I think the only way to get results is by doing stuff. So I like to work with very action-oriented people who at the end of a session proactively make commitments. And before the next session have said, look, I've actually done all my stuff. It worked. On to the next stuff. I look for positivity. I think that if there's one secret ingredient to building a business, it's positivity. So I'm always looking for that. I'm looking for vulnerability. I'm looking for people who are willing to say, I don't have all the answers. I want to surround myself with people who know a little bit more than me. There's a surprising number of CEOs who are just unwilling to say that. It's always someone else's fault. It's the team's fault. It's the investor's fault. So I'm really looking for people who are like, no, I have something I can learn here. I look for great communicators. A lot of what I do is to actually get people from good to great to mastery on communication, but there needs to be some basic communication stuff coming in. And so it's very much, and then, the ability to get results. So resourceful, growth mindset, always looking to improve themselves. And so you mentioned VC. I'm always selecting CEOs on that basis as well. And in some ways, it's somewhat self-selecting as well. So people who lack one of those skills, they don't like my approach as much.
Are you paying attention to whether they have a chip on their shoulder, whether there's some level of trauma? Like, just curious whether you factor that in.
Well, if I did, I'd probably have a very small client base, particularly in the European scene. I think the desire for people to work with coaches on kind of the emotional trauma, let's unpack my childhood, is slightly lower than what I've seen in the US. In fact, a lot of my US clients, they come to a session with the idea like, let's get to my childhood as quickly as possible. But the Europeans, I find us a bit more pragmatic. So my approach is very much, it's action-oriented, it's results-driven, and I actually think that action precedes clarity. Like, we can talk and talk and talk, but challenging you to do something differently. Let's imagine you've got a problem with your board, bad board dynamic, loud board member, not sure what to do. We can talk about it a lot and see how that board member is reminding you of your father when you were a child. And that might lead to an emotional breakthrough. But you can get the same breakthrough by changing your dynamic on the board and then reflecting. So I'm very much action focused, and I'm not that interested in really becoming a therapist to my clients. A lot of my clients have therapists, and that's great. And I think it's a very clear division between what a therapist will do and what a great coach. I mean, I'm a founder coach, so I'm a founder who's become a coach, and I work with founders on leveling up their founder leadership. I think it's nice to have a good distinction on the difference between the two things.
Maybe you can dive a bit into that, because that view is not necessarily shared by everyone, right? I think there are many that kind of see as the therapy part, so to say, being blockers, and thus being a good founder coach, you need to also work with that and not shy away from it, or just like that's a central thing to focus on. It's an interesting perspective to hold those two up against each other. And Mike, I know you care a lot about trauma and working on that side of it as well. So I'm curious to hear the two of you's perspective on this. And maybe Dave, you can start by steel manning the case for separating the two and saying, that's not what I do.
It's not super fair to say I separate the two. It's just that I focus on competence first. The outcomes might be broadly similar. I just think my approach is faster. So I think the therapeutic approach, which is to build a secure relationship with a kind of therapist figure who will have different reactions to your situations, and kind of by osmosis, a lot of that detachment kind of seeps into your being, can be transformative over a long period of time. It's very slow. And one of the things I remember, I was having a conversation with a VC maybe 3-4 years ago, right when coaching was kind of in full swing. And the VC had some concerns with me and said, what I'm seeing is a lot of my founders are having these therapeutic relationships with coaches and they're feeling a lot better, but I'm not seeing any change. I'm not seeing better results. I'm not seeing a better presence on the board. And I wish the coaching had more of a tangible impact, like had more tangible results. And that really spoke to me, because while it's definitely true that a therapeutic relationship can be very beneficial, it still leaves a gaping gap in the competence landscape. Like, how do we actually take a founder and equip them with the tools and the skills to actually scale their business beyond emotional awareness? So it's emotional component is absolutely a core part of my practice, but it's not the dominating area. In fact, you might call a coach who focuses on mindset and emotions a mindset coach or a self-awareness coach. Just like if you were a tennis coach, you kind of expect to focus on tennis. Even though at the top level, when you've got Murray coaching Djokovic or Agassi coaching, the mindset plays a huge part. But that's when you're in the final of Wimbledon. At some point, you need to learn how to do a good forehand, a good backhand. I think of myself as a founder coach. I actually trademarked the term. That's kind of my vibe. So I think of my role is to help them be the best founder they can be. There's an emotional component to that, but a lot of times the right tool to help you have the right conversation has a transformative impact. And I'll just share one thing before I hand it over to Mike. So even though my work focuses a lot on the practices and behaviors of great founder CEOs, when I speak to a client who I've been working with for many years, and I say, what's the biggest impact? I'm kind of hoping they give me this tangible result so I can put it on my website and say, like, this is the thing that people, they all say the same thing. They're like, I feel like I'm a better person now. So I teach all of my founders how to coach their team. They take that training. They're like, it has an impact on their entire life. The way they see the world has changed. We do this in every area of their business. And so it's not the fact that I think that they should be separated. I just think that the focus for efficiency, for what the founder actually wants, and for actually getting results, it could be slightly different. It doesn't have to be just focused on the emotional side.
Well, 100%. So I think the different support is needed. But to Andreas' point, I do believe that, first of all, trauma in the biggest sense of the word, right? It's a charged term and everybody has trauma. Yeah. So it's impossible to go through childhood without minor trauma, because there's all kinds of events that shape us. So if you just take this as a broad category, I do think that trauma is one of the best indicators for drive. Yeah. How driven a person is. Because after it really means you have to prove something, to yourself, to your father, you have to prove something. The problem with that is ego. Yeah. So trauma can be an incredible driver. At the same time, it can also become very toxic in terms of culture, top-down management, very ego-driven. So the way we look at it is, we call this addressed trauma, is that we look for founders who've clearly worked on their stuff. So who are very aware, who are ongoing, extremely curious to learn more about themselves, continuously, this obsession to improve themselves. And that also means they're working with different people, right? That could be a therapist, could be different coaches. And to your point, I think you need different approaches. one that's very, very metrics driven, action driven, but also approach that is more holistic. Yeah, that really helps you in your ongoing journey. Because the best founders that I've seen by far are the ones that are extremely driven, but turn that drive into purpose. Yeah, by continuously improving themselves, not just in the business side, but holistic in their entire life. And then that drive transforms into something where they are so focused on what they want to build, on their purpose, and not just on earning money or on the next milestone and success, that it becomes a culture where people are empowered, that attracts the best talent, yeah, where people really want to work.
I think there's some nuance. And also hidden in what you said is an opinion on, because you dropped in, a lot of these people are ego-driven, they run top-down management companies. The difficulty comes when, some of my companies have gone all the way. And I can't help but notice a lot of the founders who go all the way, they run their business top-down. They're high on control. They're in the details. They are making decisions. They're the ones picking the projects. And they found a way to do it that actually works, while, as you say, giving people the right level of empowerment and actually, cultivating, I think, what is like this founder mindset within their team as well, underneath their vision. I mean, the other thing you said, that just to draw out the nuance, is highly purpose-driven founders are basically saying to the world, I have a vision for the world. My vision is the right vision, and everyone needs to follow me. That's the same definition as narcissism. My way is the right way. So I just think that it's a difficult line to draw on what great looks like for founders, which is why I focus on the doing first, because there are methods. The other thing that's completely wild is when you look at so you have this kind of, there's a lot of advice that hits founders that sounds really good. It's the kind of stuff that's shared on LinkedIn. It's like, wow, I wish that were true. Like, comment, yes. But when you look at what the most successful founders, the founders who are, really en route to IPO are doing, they're almost discovering individually practices and techniques that don't follow that common thread of like, step back, empower everyone, and just, repeat the purpose. Individually, and then you look between the founders and they're very, very similar. And that's why a lot of what I do, I think of as almost like research and discovery. Like, oh, a lot of people are doing this. You wouldn't want to share it on LinkedIn, but it works. The teams like it, they like it. And so I would just say there's nuance in what you've said.
Yeah. So
what do you think about that?
Yeah, just to, also clarify. First of all, there's always nuance, but just to clarify 2 key points. When I say top down, right, I don't mean to your point of detail orientated, really on top of it, really being obsessed, understanding what's happening in every single part of the company. What I mean with this is you either tell people what to do or you give them problems to solve. Yeah, if you make it very simplistic. And I fundamentally believe in the latter. I don't believe in telling people what to do. I believe in, like, a great leader is extremely smart at empowering the people with the right problems and is in all the details. Yeah. So that's just the nuance on the first point. And the second, what you mentioned, there's a thread here, purpose. So you mentioned on the purpose level that the link is narcissistic if you have this vision and you're not deviating from it. So I think to the point of being obsessed in terms of curiosity is the most important trait is the combination of having a strong vision and conviction versus continuously learning. Yeah. And being open to adapt all the time. Because at the end of the day, Dave, I think people are always compelled by stories. There's a way around it. If you're not convinced of what you do yourself, it's really hard to convince other people. So that purpose is extremely powerful, combined with like this obsessed curiosity of just continuously learning and adapting. So that's the nuance of it there.
I love that, Mike. And notice how, to clarify your point, you went to behaviors. What I meant when I said top down is X, and you went to the behavioral level. I actually think, there's an idea of top down mindset driven behavior change. You get the right mindset, you drive the behaviors. And sometimes I use that we use that a lot actually in Founder Coach, but there's also bottom up behavior driven mindset change, where you actually get people to try out the behaviors. So that's right. You said problems, not tasks. And you could talk about that, but like if you help people break that down, this is what it looks like. This is how to hold that conversation, how to bring people in, clarify the context, clarify the right criteria, set up the right accountability. All of a sudden they're like, oh, wait, I get it. Let me try it out. And then it works and they keep doing it. So my approach is it sort of blends both, which is why it's not an either or, but there's a lot of things where actually, to be honest with you, I think if founders who are being honest, they're like, just tell me what to do once, because I have to tell everyone, X, Y, and Z, just tell me what to do. And I give them a framework, give them a blueprint or a playbook, and they're like, thank you. They try it out and they're changed. One founder who did my coach training came back and said, Dave, how do I get my team to be more curious? And the answer to that is you have to encourage them to ask more questions, right? It's the questions that often drive the curiosity, because what questions do is they make you realize the thing that you were thinking isn't actually the truth. And so so I'm very much like, there is a nuance here, because sometimes the right big insight will have a massive impact. So I'm always kind of throwing both at the problem. But it's not enough, I think, to just stick on an emotional level. And to your point about trauma, 100%, there's a shadow. So if you think about the extreme of the founder leader, there's very predictable error patterns, right? So someone who's really elevated in their role, they're like, I am the center of my founder-led business, as you say, is going to create maybe some silence around them. They're going to create an environment where their opinion is always the right opinion, which is like going to lead to blind spots. A founder who dials up to the extreme on performance culture, if you think about some of the most hardcore CEOs in popular culture, they've really dialed up performance culture. A predictable thing, we think of high performance culture as a universally good thing, but actually everything has a shadow. The more you turn up high performance, the more you can end up creating like a competitive environment where people are kind of afraid for their job. Like I lived near a guy who was working at Revolut, and all I'll say is like, he was a mess. He was a mess. Now that is a direct response to dialing up the team activation to the max. So there is a balance here. And I don't want to say that like it's only this way. A lot of what I'm doing with my clients is walking the right balance between, empowerment, like let me like numbers, hit your numbers. I don't care how you do it. Just come back at the end of the quarter and show me. And, a closer, more kind of eyes-on approach.
When you start working with a customer, what are the core things typically, even though every case is different, that you try to do ASAP, to achieve results? So maybe walk us through a few, and then I would love to zoom a bit more into founder mode. Watch your videos. I'm very curious to go into that as well.
Well, let me tell you a little bit about my methodology. I actually think a lot of coaching companies, I think majority of coaching companies are really built around the coach. That's why the heart of most coaching practices is the one-on-one. And the one-on-one, little trade secret, it's like the easiest session to run as a coach. Don't let them fool you otherwise. You go in, you ask questions, you say something smart. There's no prep, there's no post. It's very convenient. And a lot of coaches will build around that. But I don't believe that if you really want to build a coaching system that delivers results, I don't believe it's the most effective. In fact, we'll talk about founder mode after. I've run my business in founder mode, and I can share with you some of the insights from that. So I really wanted to build a very founder-centered approach. And it's taken me, 7 years of continuous iteration. And when I say iteration, I mean, we take feedback to the extreme at my company. We're collecting feedback signals every day and working around it. But let me tell you how the approach works by explaining some of the core principles. So the first thing is, if you want to get what you want, you have to know what you want. And so a lot of what we do early on, and actually throughout, is just helping founders to really clarify what it is they want. Sounds like a trivial question. My experience is none of us know what we want. In fact, if I asked either of you what you want, and I kept asking it 5 or 6 times, the 5th time would be different from the first time, and you'd be confused. You're like, actually, what the hell do I want? So this is why one of the pillars of my approach is planning. I bring all of my clients together once a quarter, and we plan their CEO agenda. So CEOs often conceptualize their role as the company's results and the things I need to achieve. I'm like, no, that's not true. The company has goals, which is what everyone needs to align to. And the CEO has goals. They're different from the company goals. The CEO contributes to the company goals in a very defined way. And so we do a lot of planning. We build a roadmap. We clarify the specific results that the founders want to achieve over the quarter. Their responsibility is to get the results. My responsibility is to them to help them get results. Second big principle, competence before confidence. So like I say, the emotional challenges around being a CEO, and actually we know, right, that we got Wimbledon in the UK right now. We know that the person who wins Wimbledon, when they go into that final, they're the most focused, the most confident. They know exactly what they have to achieve, and they're unwavering. But what you don't see are the years of practice that goes before that. So I believe that confidence is a result of competence, which is why I place a really big focus on training. I think training is the single most undervalued thing you can do in business. We expect people to come with all of the right behaviors, frameworks, and knowledge. And we're like, I'm not going to train you. It takes too long. I've made it my business to be the most effective, efficient trainer of CEOs out there. So training is number 2. Number 3, fastest way to learn is to teach. You both know this, right? When you're explaining something to someone else, first of all, you learn all the stuff that people ask you good questions, kind of makes your own knowledge more robust. Also, like, leans into your own cognitive biases. Where like, okay, I'm really going to focus on this for a period of time while I help other people level up. And every coach knows this. We get better when our clients get better. So I've actually integrated peer-to-peer coaching and support into my model. So we've got planning, we've got training, we've got peer-to-peer. Number 4, action precedes clarity. You can overthink your problems all you like. You can connect your problem with what happened in your childhood and figure it out from there and sort of go down, what do they say? The turtles go all the way down. But we place a really big focus on action. Action is what gets results. Doing things differently or doing things at all, if you've been avoiding stuff, is what gets results. So we place a really big emphasis on agency. It's your job to get the results. I'm here to support you. What that means is, if a client wants a call today, after this call, we'll do it. Whatever is needed to get the result. And then we want to celebrate those results. And then the 5th is that company building is a marathon, not a sprint. And that means if you're a coach and you're thinking about your business as, I'm going to work with you for 3 months, going to teach you what I know and move on to the next one. I don't know if that's how business building works. I don't think you get that one insight and then everything changes. I think frankly, every month you need a new insight. And so I built my process as a very long-term affair. So I think the average tenure of a client with me is something like 2.8 years, but it's highly skewed because I'm still working with many founders for, 5, 6, 7 years.
And on point 4, is it mainly that you just help them to really develop smart goals and then track whether they execute on it and to build a pattern of execution, or how do you help them to be more actionable?
So one thing that I learned along the way is that visual clarity is the highest form of clarity. A lot of the things that hold CEOs back is just knowing what good looks like. Maybe they're hiring. Like, I don't know what a good CMO looks like at this stage. Maybe they're having a difficult conversation. They're like, I don't know what a difficult conversation should look like, what the outcome should look like. Maybe they're doing a strategy and they've got like a 50-page strategy doc. Like, no one remembers it or reads it. What does a good strategy doc look like? So a lot of my methods help people visualize what good looks like. Because when you have when it's super, super clear what you need to do, you do it. So I'll give you a little story. This is about like 4 years ago. I was working with a client, really successful client, but really complex problem, the kind of problem that I hadn't seen before. We were talking it through. And about halfway through, I'm a visual thinker. Halfway through, I pull out my notepad and I start sketching. And I'm like, hang on, does it look like this? And I drew a triangle. And it was the fastest route to an insight I've ever seen. So he looked at the triangle. He's like, oh my God, that's obviously it. And I know exactly what I need to do. I've come to learn that visual models provide a really good way to help people get super clear on what needs to happen. I've built over 500 visual models. It's squares, it's circles, it's triangles. Because if you get the right model, it's the fastest road to an insight. And a model, by the way, what a model is really doing is it's helping you. It's basically asking you to locate yourself on this model. It's asking the right questions, but a great model is prescribing the right thing to do. This is what you need to do. So very quickly, I help my clients understand to get this result. This is the shape of the conversation that needs to be had. And this is what you need to do. And on the behavioral level, it's actually makes things super clear, but the behaviors over time really shape the mindset. And so agency is, you need the insight, you need the motivation, you need the capability. And what I try to do is to give them all three so they can act and get the result.
And do you help them as well to implement kind of visual storytelling in their companies, right? To embed that in the culture. I actually think back in my days, like quite some time ago, I worked at Amazon, right? That what they use really well is a 2x2. And it goes all the way up. Yeah. So where essentially 2x2s can look different, but it's typically business update, top left, risk challenges, then you go into like metrics and into benefit for a customer. And what it really forces you to do is to really think like what matters, what is really important here. And then it's condensed all the way up to CEO level. Do you help companies with implementing this kind of stuff, whatever it is, different visual methods?
Okay, let me tell you a story. A lot of insights are delivered orally. And the way it works is, if you think about the anatomy of a one-on-one session, you talk, you're building up this context and some content. And then as a coach, you might either ask a question or drop an insight and it super lands. But oral insights have three big problems. The first is that they're slow to deliver. It requires a lot of context building. It requires that sort of putting the person in the right mindset, putting all the pieces together for the insight to drop. Number two, that makes them really hard to share. So imagine this, CEO comes out of your board meeting. It's like, it's so clear now. Thank you, board. Let me just share this with the team. All of a sudden, it's like, now you've placed a huge burden on them to try and create all of that context in order to get the team to understand it. Number three, it's really easily forgotten. You feel really good, right? You come out of that session, I got that clarity. 2 days later, you don't. It's gone. And so what I realized is that visual clarity is the highest form of clarity. So let me tell you at least 5 things that visual models do, which is going to answer a question. The first thing a visual model do, it will take a complex problem and it'll break it down into a number of questions that you need to answer. So it takes one big question into 5 little questions that are much easier. And what's more, it's not a blank page. It's like there's a model and you just have to answer the questions. Number 2, it creates an insight that's much easier to explain. You explain the model, the insight drops, the insight lands. Number 3, it depersonalizes the insight. So imagine you have to give some difficult feedback to the team. It's you and them. And the team are looking at you and they're like, you moron. You're so mean. Why are you telling this to me? With a model, you're both looking at the model. The model is independent. It's writing on a piece of paper. So it makes difficult insights and useful insights far easier to have those conversations. Number 4, it focuses attention because we're all visual people. If we've got sight, we like to look at stuff. It's not just about thinking. And number 5, it's shareable. So one of my clients, it's about a year ago, I said, and we've been working together for like 5 years. I'm like, what's the biggest result you've had from Founder Coach? And she turns to me and said, she thinks about it. She's like, tools and frameworks that I can apply to the team. And it feels like I'm cheating. It feels like I am cheating because I showed them the model, they got the insight, they got the result, I feel happy, etc. And so, remember I mentioned like one-on-ones have some drawbacks. As a founder, and when you need to scale your business, you'll quickly find your calendar becomes overwhelmed with one-on-ones. And even if you get better and better at doing one-on-ones, it's almost like you're becoming better and better at a job. You're just going to have to fire yourself from later because groups are the only thing that scale. And it turns out in the pursuit to teach managers how to run good one-on-ones, we underplay the importance of how to run great group meetings. And so like a model completely transforms your ability to communicate an insight to an entire group And when you look at the best founders, they limit the number of one-on-ones that they have. And what they'll say is, I hire people who are senior enough and they don't need them. But what they really mean is, I've actually figured out a few things that make our meetings a lot better and more useful. And so I conceptualize my role as codifying what the best do into something actionable. And when you do the thing, it really does transform who you are as a leader. Just like coaching. Coaching is mysterious, it's vague, do you have to know about psychology and trauma? Well, if you learn some basic behaviors and put them into practice, you will learn a huge amount about yourself and it will change. I've had people who go through Founder Coach and they're like, it's completely changed my relationship with my kids. Because how you do one thing is how you do anything. And so to your point, models very, very powerful. And I've really made it the bedrock of my practice.
I'm going to ask 3 very different questions. One, if you have to pick one, what's one of your favorite visual models? Whatever it is, yeah? Just the first one maybe that comes up that you've used a lot. Just curious. Second, you mentioned the group meetings, yeah, versus one-on-ones that are not scalable. What is, if you, again, have to pick one, the most important thing to keep in mind, yeah? Like hosting scalable group meetings. And the last one, it's good that you're writing it down, is I saw a video and I really loved what you were saying about product launches. Because what you said about product launches is you can use it ongoing as a way to align the company. And I love that. It's like building, it's a milestone the whole company works towards. So I know it's a lot packed in. That's why I said 3 very different questions, but I'd love to hear.
Let me make sure I've captured the questions. One was, what's my favorite model?
Visual model. Yeah.
The second one was, what's one thing for a group to improve your meetings?
Yeah. So if for the listener, for the founder that listens here, switching more from one-on-ones to group meetings, yeah, to be more scalable. What's one thing they should pay attention to, like that you find most important? And
Perfect.
running group meetings. And the third one goes into the product launches.
Okay. All right. So my favorite model, my favorite model is always the last one I created. So if you go to davebailey.com and you go to the workshop tab, you can actually see the workshop that you've seen. And I think the model that had the big one, well, there's a few models that were really that really landed. We'll go into the product launch one as well, the recurring product launch. But the other one was the onboarding on-ramp. So how to think about onboarding execs. That really resonates. So it's maybe not my favorite, but one that we're really discussing a lot in the community right now is about how to do great onboarding. And it's really the opposite of how most founders do it. And the model visualizes it. Maybe you could even remember the shape, right? Like it's a very visual system. It works really well. Given time, the best way to find that out would be on davebailey.com. So if you're trying to deleverage the amount of one-on-ones in your calendar, a couple of things to look out for. It's a broader topic, but I'll just pick 2. The first is, particularly if you're an early stage founder and you don't have the kind of founder style, highly experienced, I know what I'm doing leaders, dropping one-on-ones is probably a bad thing to do. So I think one-on-ones are absolutely appropriate when you have slightly more junior people who need a little bit of showing the ropes, particularly on team dynamics and the basics. So if you have like a junior on your team, dropping one-on-ones, you need to do gradually, and you need to make sure or put in other support mechanisms such as training. We do a lot of work on helping founders create training, rapid training to help people like that. But it's a bit of a gotcha, right? So the answer isn't to just like can all your one-on-ones. You have to do it appropriately. And then when it comes to group meetings, I would say one of the things that happens to a lot of my we work with a lot of our clients to do very early on is to radically deleverage their calendar. Many of them achieve 50, 60, 70% freeing up of their time. So it's not a question of freeing up a couple of hours. We'll actually show people ways to lead their entire team in 1 or 2 days. And I think of all the people who've done my workshops, that's one of the biggest, like, oh my God, I didn't realize you could do that. I'll show you how it's done. And then you do it. And so I get these messages from clients being like, I can't believe it. Like I freed up so much of my time. And the way to do it is this, or one of the components. You need to get really intentional with your meetings. And you need to understand that as a CEO, I mean, what I'm saying really applies uniquely to founder CEOs and to leadership than elsewhere in the company. You need to really understand that your meetings need to serve you so that you can serve the team. So the team meeting is somewhat of a misnomer. I think the team meeting is really the CEO meeting. It's where the team are providing the CEO with the context, the information, the transparency, so that the CEO can help guide the ship, coach when needed in public, and actually run the business, which is what the CEO needs to do. And by doing that, by actually it's actually really helpful. By focusing on that, it actually helps the team to collaborate too. So I think you've got to get really intentional with your meetings to say, what meetings do I need to run the business and achieve my goals as a CEO? And what you'll find is once you've clarified that, you completely rationalize the number of meetings in your calendar. And that opens up time. Now, a lot of people think I'm suggesting that they don't spend any time with their team for 70% of the time. What I really mean is that the regular meetings, of which are highly intentional and you design to support you, free up so much of your time that you can now, if that's your, if that's the thing you love to do, spend time coaching and thought partnering with the team in a completely different way from like a full calendar of recurring meetings, it's a motivation killer for CEOs and founders. The third question, product launches. So this is a big secret. A lot of people think product launches are about marketing. And they think that it happens at the very beginning. You just build the product. If this wave of energy, like we're going to launch on the 31st of July. And so there's this wave of energy. Everyone's focused on the launch. What happens? The scope that you wanted to launch with, you're like, no, that's not going to work. We need to cut the scope because we are going to make this date. We've promised some people, brought some investors, we brought some customers together, and we're going to launch. All right, marketing. Well, just think about what that launch is doing for you. It's making it super clear that we have a scope, we have a deadline, and the whole scope is designed to present to customers what you're doing. This is strategy. This is a strategic conversation. What are we showing our customers? And it presupposes that the most important thing is customers, which it is. Question then becomes, why launch just once? How many of your customers remember your launch from, 2015? No one does. So launches are not this like one-time marketing event. They're a strategic forcing function to have an external deadline focused on customers that provides your team with alignment. It provides them with accountability and a huge moment to celebrate once it's done. And so it builds this kind of ambition within the team as well. And then I tell you this, and then I say this, every single at-scale tech company does product launches every year. Every single one of them. From the Apple showcase event that we just had a few days ago to the Google I/Os, the Facebook, and then all the B2B companies. They have these launches as well. So the launch is a strategic tool used in founder leadership. It's one of these like invisible, visible practices that I collect and teach to align the complete team. And it goes even further. Not only are you aligning the team, it's a marketing moment for your customers. You can invite customers. You can invite prospects. You can invite investors. And they're all looking at you for that half an hour or 2 hours and listening to what you're saying. So you're bringing them in, you're creating this exclusivity, you're creating a community. By the way, in the world of AI, everything kind of evaporates except for community because everything else is copyable. You can't copy community. You're building community. You're basically getting feedback directly from customers. How many times have you heard a founder say, God, I wish I could get my tech team to speak with customers. I wish I could get my XYZ team to speak more with customers. Well, invite the whole team. Invite the whole team so that they can speak to customers. And then what are you doing for customers? You're saying, customers, there's a point in time where I want you to look at me for like 2 hours and you're literally telling them all of the features of your product. What an amazing opportunity to increase retention. So you increase the sales, you increase retention. So it's a big secret and it's an incredibly powerful strategic tool. It's like way more powerful than OKRs. Okay, because OKRs is not as much of a forcing function. It's not a real deadline either, like 3 months. The financial calendar is not as much as a real deadline. And there's something immensely clarifying to say, okay, in 6 months, we're going to bring together our best customers and we're going to show them what we've done for them.
Yeah. I love that. I love that alignment and building up momentum. Yeah, thank you. I mean, I would love to maybe turn a bit into the other side of the medal. We can touch this briefly, but what would be your key advice for VCs? You work with a lot of venture-backed startups. I've been a VC before. You see the dynamic between the founder and the VCs all the time. So what would be your ask? You know, what should VCs be better at? What should we pay attention to? What are you seeing in the ecosystem?
I would say a couple of things. So I'm going to give you the same, or give VCs the same advice I give founders. I think it's a really worthwhile discussion to have maybe a couple times a year about what is the role of the CEO and what is the role of the board. Because boards don't have the same remit, right? There's the textbook thing, but then every board member is going to come in with a bit of an assumption. Like, who really sets the strategy? What does that mean? What do we do? What are the people's roles when there's disagreement about the strategy? Who makes the final call? Et cetera, et cetera. So I think actually clarifying the remits and the roles really, really helpful. We would do this anywhere else. I do this with all my clients, have some sort of feedback loop on the board. Could be 2 questions, what went well, what didn't go well, but have some sort of feedback on the board. By the way, just as a slight aside, when I'm doing my work, at least some of the work I do with founders is in group. And the way I run my groups, my founders then imitate in their companies. So you ask, like, how do you get better at groups? Well, you need a model to follow. You need someone to follow. And so we always get feedback from every single session in the session. It only takes a minute, but you get that feedback. So I think if every board had a feedback loop, I think it'd be much more effective, wouldn't it? That's how we learn. The last one, because I thought about this a little bit, is I think as a VC, it's really worth at least asking yourself, as I assume this board position, do I fit with the company's culture? Or to flip it around, is the company culture a fit for me? Because I think that should be more of a discussion about how the setup of the board is aligned to the company's way of working, which, by the way, in a founder-led company is very linked to the founder's way of working. So if I was saying, what would I predict a really effective VC CEO relationship to look like? It'd be one in which they have very similar ways of working, approaching problems, et cetera, et cetera. In many cases, by the way, this actually cuts across the grain, because one of the common narratives is that we should always value diversity over everything, including diverse ways of working. And I think that while it sounds true, I don't know if it is. And I actually think that's understanding the things that you demand similarity is a really powerful thing to do, because it's not all about, I think the diversity thing is important, but it crowds out, when is similarity essential? So I would be looking for some similarities. It's got nothing to do with, what group you are part of. It's actually more of a belief, you can think of it as a belief system or a mindset or a set of approaches and behaviors to certain things. I would look at that and take it seriously, because you can have the perfect company, but if the way the CEO wants to run their business is fundamentally different from the way you would run your business, you're going to have a lot of conflict that just slows things down. And actually in the game that we're all playing, speed is absolutely paramount. We just want to move fast and learn and iterate. So slow, diversity often leads to better decisions, but what people don't talk about is they're much slower decisions. And particularly if you believe in consensus, then it's even slower. Consensus business building takes a lot of time. So take from that what you will, discard the bits you don't like.
I especially agree in the board part of the dynamic you mentioned, because I think that's often very toxic, where it becomes a reporting exercise for the CEO, right? To sit for 2 hours and like show all the numbers and then get some, very obvious questions from the VC sitting there at the table, where it could be turned around into like reporting up front. We ask some of the key questions up front and we focus the session purely into where are the bottlenecks, what is it that the company needs, and taking into additional people, for instance, into the board meeting if needed, for experts to address strategic issues. And going back to the beginning of the call, just asking better questions.
I'll double click on that. So I think the first principle I mentioned to you is if you don't know what you want, you won't get what you want. And the way you describe the board meeting is actually very similar to the way the best founders that I work with run their board meetings. So we basically transform the whole structure and philosophy of that meeting when we're working on, board issues with clients. But the underlying idea is that one of the models that founders have on the board is it's their job to sell the ideas and to sell the progress to the board members. So the board members are buying and the founders are selling. And this dynamic starts during the fundraise because they're literally selling equity in their company. And it's very clear who's making the decisions. The board, the investor's making the decision, and the founder thinks of themselves as like the seller. When I'm working with the CEO, we actually change the dynamic by changing the role that the CEO thinks they're playing on the board. They're not the seller, they're the buyer. They are buying the insights and the questions and the ability to contribute from board members. And when you set high standards and you know what you want, people tend to live up to your standards. So if standards need to change on the board, it really has to come from the CEO. And you as board members you should feel a little bit uncomfortable, being like, wow, this CEO means business and I have to raise my game. And it's not immediately obvious that the CEO is going to buy what I'm saying. Because in this model, it's the CEO who makes the decisions. And I believe, this is why I think we need to clarify the role of the board and the CEO. Is the board making decisions, which often means the loudest board member? Or is it an empowered CEO who's making the decisions and therefore wants to be, it's their decision. They just want as much input. You talk about low ego, right? Like get the ego out of the way. You just need to define, like, is this helpful? Is this data request helpful? Is it? Sometimes it is. It's like, yeah, just got to do it. Sometimes it isn't, in which case I tell people how to push back in the right way, in a respectful way. The way you run a board meeting can have a big impact on some of those dynamics that are,
And I love the phrase from seller to buyer. We're running out of time. I think this is actually a great way to wrap it up. I think, and I don't know, Andreas, whether you want to add anything.
I've truly enjoyed just listening in for once. It was incredibly enjoyable. Very nice to have my mind blown a bit by you, Dave. Incredible conversation. Thank you for bringing that to the pod, Mike.
It's my pleasure. If anything has resonated with any of the listeners, you can go to dave-bailey.com, find out a little bit more about my work. There's a lot of free resources. And of course, if you want to get in touch and get some support in scaling your business, there's a place to do that too on the website. So thanks very much for having me. I've loved it.
Absolutely. Thank you so much. I really hope everyone who tuned in just as I did today have enjoyed it just as much as I did. Thank you, everyone. Before we start the show, a quick note. If you're building or running a fund, you know it takes the right partners. At EUVC, we only work with sponsors we truly believe should be part of your tech stack. Please do take a moment to hear about them. And if you do, reach out, mention EUVC. It's the best way you can support what we do. Thank you so much. Starting off, HSBC Innovation Banking. If you're a founder, a scale-up, or a VC, you need a bank that actually understands your world. HSBC Innovation Banking backs innovation globally, from seed to IPO. And if you ask me, a strong banking partner like HSBC belongs in your stack. If your portfolio companies are scaling, they need infrastructure that won't slow them down. Google Cloud Starter Program offers $2,000 to $350,000 in credits, plus technical support to build better and faster. It's a key boost every fund should bring into their ecosystem, and oh my God, are we thankful to be partnering with them. Now, legal is a space you cannot lag on. Legal needs to move at the speed of venture. Goodwin's team has decades of experience with startups and funds. They're trusted at every stage from formation to exit. Goodwin definitely is a legal partner every serious manager should have in their stack. For Luxembourg-based VC, PE, and fund of fund managers, modern funds means going digital. Fundcrafts gives you a full-service, digital native platform built for today's European managers. It's a must-have if you're scaling smart. So we all hear about the Middle East. How about you go there? From AI to deep tech to sovereign fund, SkyTech in Dubai is where global future of tech gets negotiated. It's not just a conference, it's where East meets West, capital meets innovation, and the bold set the agenda. If you're playing on the global stage, join us going to SkyTech this year. If you're gearing up for your next fundraise and want a placement agent who truly understands emerging managers, reach out to C Funds. They're a boutique placement agency that has helped GPs across Europe raise capital from top-tier LPs. We've been on the other side of the table here. They are actually good ones to work with. So I do urge you to go to cfunds.io to go and check them out. And hey, before you go, if you're looking to discover startups, raise capital, or connect with innovation leaders, do check out dealflow.eu, the EU-backed platform bridging founders, VCs, and corporates. There's no better place to find the startups that have received significant funding from the European innovation ecosystem.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.